10 a.m. right here in Lagos, Nigeria. Good morning, good evening, wherever in the world you're watching from. It's Business Morning, live from Channels HQ. Let's take a look at what's in the news now. I see the Nigerian Railway Corporation says it generated 5.57 billion naira revenue from passengers, cargoes, and other services in 2022. The figure represents a decrease of 7.69% to 464.74 million naira when compared to 6.03 billion naira generated in 2021. According to the report published by the National Bureau of Statistics, the corporation generated 4.54 billion naira from passengers in 2022 against 5.69 billion naira in 2021. While goods and cargoes raked in 416.85 million naira in the review period. And to the global oil market, now we see oil prices drop today as the market weighed potential interest rate hikes from the U.S. Federal Reserve could slow growth and dampen oil consumption, offsetting falling U.S. inventories and strong Chinese economic data. We see Brent crude there is trading down 35 cents, about 0.4% down at $84.42 a barrel, while U.S. WTI crude fell 33 cents to $80.53 a barrel. Markets are pricing in an 86% chance the Fed raises rates by 25 basis points at its May policy meeting. In Europe, European Central Bank officials are also wary of inflation and suggesting interest rates must keep rising. And the Lagos Chamber of Commerce and Industry says the federal government's plans to remove petrol subsidy will reduce the country's debts and tackle widespread corruption in the oil sector. It's the optimism coming from the LCCI's president, Dr. Michael Olawale Cole, at the Chamber's second quarter State of the Economy conference in Lagos. He adds that the removal of fuel subsidies is also expected to spur investment in domestic refining and petrochemicals and create a significant value chain for various shareholders. However, Dr. Olawale Cole asked the government to begin early rollout of palliatives to mitigate any likely disruptions to the economy. And the Nigerian Midstream and Downstream Petroleum Regulatory Authority, NMDPRA, is asking operators and end users of gas to obtain the requisite petroleum storage license. This formed the main thrust of discussion at the stakeholders meeting in Lagos. Executive Director, Distribution System Storage and Retailing Infrastructure, Mr. Obugo Koha, among other things, also emphasizes the essence of the transition from white products to gas. Meanwhile, Managing Director of Petroleum Managers in Lagos, Mr. Demola Shabi, has a message for the incoming administration. Take a listen.
At a certain volume, in compliance with both the PIA and the regulations we've drafted, you need to bring yourself within the regulatory space because only in so doing that can we guarantee both technical and operational safety. This transition is inevitable. The authority didn't declare it initially. It's something that from the presidential level down to the ministerial, Nigeria has declared gas as a transition fuel of choice. Also, the global trend about the run on day-tier fuels, which is why Nigeria has chosen gas as a transition fuel. We will begin to see some reduction ultimately globally on the contribution and market share of the different fuels. There will be some dynamics as we go on. So the earlier we sign on to this, the better for us.
They should work more on reducing, they should just reduce the regulations. They should make gases, they should make it more friendly. It has to go into our system. You see, using it in the vehicle, we use it on domestic. We want all the industries to be using it. So they should create a more friendly platform for the operators so that it will be much easier for them to go invest on. Because we really need to invest on gas. It is very, very important.
To our first conversation now, the IMF has brought out a couple of recommendations to the federal government of Nigeria to reduce its debt by focusing on increasing the tax basket and compliance as a means of generating revenue to cut borrowing. And there's been a lot of reactions to the recommendation. Let's talk to Mr. Wale Smart now here, the Director General, Nigeria Employers Consultative Association, joining me right here in the studio.
Thank you.
Great to have you. Good morning.
Thank you. Good morning, and thanks for having us.
So quite a lot, came out from the just concluded spring meetings with the IMF and the World Bank, and a lot of recommendations, coming out. One is this issue about increasing the tax basket. And for you, okay, there's one thing is increasing tax basket, and one thing is also increasing tax itself. So how do you see this recommendation? I've seen you've reacted quite a lot in the media.
Absolutely. It's an interesting conversation we've had over the past few days, and is tax necessary? Absolutely. Someone said two things are very, very, very sure, certain things. It's either death and tax in most places. And tax has proved to be a source of revenue for most governments, world governments, to drive development. So we don't have a problem with the issue of tax. We don't have a problem with paying tax. Organized businesses doesn't have a problem with compliance, and hardly will you find a responsible business also evading tax. Our challenge is the conversation about increasing tax. Now, while tax is necessary, then you must put in context and try to balance three key issues. Issue of what are you taxing, the issue of when do you want to tax, and the issue of, and the third issue, what to tax, when to tax, and how you are going to tax, the rate at which you are going to tax. You have to create a balance within those three. When are you going to tax? Do you tax when the economy is booming, or do you tax when the economy is standing on one leg? What are the rates of the tax? Are you taxing to control consumption in the context of ostentatious goods, luxury goods? Are you taxing, or are you reducing tax to increase consumption? Because it's when you increase consumption, that is when government can actually make revenue from the individual, make revenue from households, and make revenue from businesses. But in this case, when the conversation about increasing tax came, our concern is this. Businesses are currently overtaxed. There was a report by PwC and the World Bank a few years ago that shows that an average business in Nigeria pays over 69 different types of taxes annually. Nobody does that. You don't create contradictions for yourself. We are talking of issue of unemployment, high inflation rate, and at the same time, we are creating bottlenecks, deliberate bottlenecks, to negate some of those policies that government itself has created to drive employment. A typical issue of concern to us was the issue of excise duty that came up last year. There was already a roadmap to tax carbonated, non-carbonated, alcoholic, and spirits. There was a roadmap of this is a tax excise duty for 2022, excise duty for 2023, excise duty for 2024. Less than a year, less than 6 months, when the stakeholders agreed on that roadmap, government came up around November, December, and wanted to increase excise duty on those products. I would say, look, you don't just wake up one day for whatever reason. Yes, we have revenue issues, but you don't continue to complain about the effects while you keep feeding the costs. Because if you keep increasing taxes, you keep increasing excise, two things will happen. Those products will probably go out of the reach of average Nigerians whose purchasing power is already reduced. So once Nigerians can buy, the businesses cannot produce. Once the businesses cannot produce, the natural consequence will be reduction in production capacity, which might also feed into the issue of your unemployment. And once the product is out of the reach of an average Nigerian, then you are also fueling smuggling. Because people can go to neighboring countries and bring in those things, because those that want to drink will always drink. Those that want to eat, they will always eat. So you are fueling smuggling. Is customs prepared to man the over 1,000 borders, 1,000, 2,000 borders that we have in the country? So by increasing your excise, by not being conscious of your peculiar circumstances, by not being conscious and being concerned about the feelings of the operators in those sectors, you are killing the sector, you are increasing the issue of unemployment, you are encouraging smuggling, and you are creating bigger problems for yourself. And those are concerns.
Increasing the tax basket does not play into increasing taxes?
Now, increasing the tax basket also implies that you will increase the quantum of taxes that businesses are paying. You know, the same conversation that came out from the effort of government to harmonize the taxes a few years ago, the outcome, or part of the outcome, you know, we had more than the 69 taxes that businesses were already paying. And our view is this: look, there are challenges. Why not let's face those challenges? The challenge of tax evasion and the challenge of non-compliance. So why not let's face these two challenges and face it squarely, and let's also deal with the issue of leakages. We are paying taxes. Have we taken due cognizance of what exactly are those taxes that we've collected? What are they used for? So those are the conversations we should be having. Raising tax at this point, I don't think is the conversation that we have. We should be focused on encouraging consumption.
Because now we know the government does, you know, have a revenue problem, you know, at this time, and we also have debt issues, you know. So what next? What else can the government
Ladi, we have revenue problems, right? We know we have revenue problems. And why do we have revenue problems? One, our mainstay for now, you know, the main product that gives us forex is basically oil, right? Now, why are we not meeting our OPEX quota? You know, we have our 1.8 something million OPEC quota. We are not meeting the quota. So if you are selling...
Even though it started increasing in the first quarter.
Yes, it started increasing. And we commend government for that. We commend the NNPC for that effort. The efforts that they've put in place to reduce oil theft, quite commendable. And we appreciate that. But if we had maintained the quota, then the challenges of forex wouldn't have been this significant. If we had managed our resources and ensure fiscal discipline that is enshrined in part of our laws, we wouldn't have run ourselves into this humongous debt that we are talking about. So you don't punish organized businesses, you don't punish Nigerians for government's recklessness, financial recklessness over the past years. Those are our concerns, and those are the genuine concerns of all stakeholders.
And definitely, this year has proved to be the year of strikes, you know, in global economies, and even right here in Nigeria, we had a 2-day warning strike from the aviation workers. What's your reaction? How do you see that warning strike?
To our colleagues, their colleagues in the union, they have the right to pursue their grievances anyhow they want to, but we're a strong advocate of social dialogue. You know, while we appreciate the concern, we appreciate the issues, the inherent issues that the unions are facing, it affects all of us. But we also be conscious so that we don't throw the baby away with the waters. The economy is already bleeding. You know, organized businesses is bleeding. So whatever action that we take that will further compromise the survival of businesses, I think we should reflect on it before we take it. You can imagine people that have contractual obligations out of Lagos on Monday or Tuesday, people that have made commitment to vendors, businesses whose survival is hanging on their leaving Lagos yesterday or the day before. You can imagine the crisis that will put those businesses. So we are an advocate of social dialogue. No matter the issue, I think social dialogue should play a critical role in resolving it. After all the issues, you know, the funny thing is this: we'll all still come back to the tables to discuss. So why not let's maximize the use of social dialogue in resolving all these issues. Government has its issues; they have its challenges. Historically, we've seen government not living up to its expectation, not honoring agreements. But I said we should not compromise our survival, our general survival, by certain action. And someone said also, if you are in a hole, the first thing you should do is to stop digging. So the economy is in crisis already. Government is struggling to stay afloat. Organized business is struggling to maintain production. So let's not, whatever action that will drag us deeper into the hole, I think we should not take such actions.
And talking about still coming back to the table, you know, for both sides, where do you see this issue? What resolution do you see going forward?
On the issue of the tax, or the
aviation workers.
Well, they've given the first strike is 2 days warning strike, yes. We ended yesterday. We expect government to be responsible enough to hearken to the call of the unions. I think there was conversation initially that they've had. I think there's nothing wrong in bringing everybody to the table. You know, Labor is not a commodity as we all agree. And if people, if somebody has worked, then he deserves his wages. And if you've made commitment to increase, eventually you are not in a position to increase again, then you should, the same process that led you to that agreement of increasing, you should reinitiate that same process to say, look, the agreement that we made at that material time, because of certain issues now, we cannot meet that agreement again. Then you come back to the table and discuss it. And for the issue of the tax, what we think is this: government should take a second look at these increases. We add that by May, there's going to be some humongous, some threatening increase in excise and ad valorem for products in that subsector of spirits, alcohol, non-alcoholic products. I think government should take a critical look at that decision so that we don't compound the issue of unemployment, we don't create problems for that subsector, because if that subsector should close down, then we have much more deeper problems than we anticipate.
Talking about the unemployment rate at this time, still stands about 33%, and their projections...
KPMG came up and said it's now 40-something.
It's going to hit
41% thereabout, yes.
6%. That's a big one. How do we reverse this?
Now, if unemployment rate is reducing, there are parameters that points to it, that will influence it. Either the economy is improving, inflation is coming down, businesses are thriving, then because they are thriving, they are able to employ more, because your tax system is friendly, because the regulatory and legislative environment is friendly, so you are attracting foreign direct investment, then you realize unemployment gradually will be going down because all those parameters are positively fueling it. Now, if unemployment is increasing, it's the flip side. It's either your tax system is disincentive to investments, to local and also foreign investors. Your policies are inconsistent, like the excise duty I mentioned. And investors are wondering, look, how can I bring my funds to this kind of environment where after agreement has been made, stakeholders agree on a path, and within 3 months, 6 months, government can come back and change that trajectory. When businesses are not doing well, those are signals that, look, something will give. And normally what gives? You trade off growth and you trade off employment, which is happening to what exactly we've seen with that figure. If it had been different, then we would have contested, because all the parameters, even with the good effort of government, with the good intention of government, all those parameters, current parameters, doesn't support the reduction in unemployment rate. So government should take time, should be conscious of dealing with all the contradictions that we have pointed out to government. We've approached government, we've sent papers to government, we've shared our perspective, we've shared policy options with government. Now look, even the revenue challenge, the spirits don't steal oil. Spirits don't steal crude oil. And you don't steal crude oil with 4-liter gallons. So how will a sovereign, a country as ours, say we are having issue with oil theft? What is happening to all other OPEC countries? How have they dealt with the issue of oil theft? Those are the issues and the conversations that we should have. So we should focus on, not on the issue of increasing taxes, but let's focus on how do we expand the tax net. There's so many Nigerians not in the tax net. How do we expand the tax net, and how do we make judicious use of the taxes that we have collected? Those will directly impact the issue of loan, of debt that we're talking about. Because the more cash we have, the less our propensity to want to borrow.
And we should also get those employers, get them successful enough to pay as much taxes.
As much tax as they have to pay. I can assure you that businesses, one of the things we preach in our association in NECA is responsible enterprises. So if an enterprise is not paying the tax required, then the authorities should take necessary steps. But I can assure you, if the tax is friendly, if the process of paying is friendly, it's not cumbersome, an average Nigerian business, that's our members, is willing to pay their appropriate tax and continue to contribute to national development.
All right, I guess we'll leave it there now. Thank you so much for coming on show.
Thank you
Mr. Wale Smatu-Yenride, Director General, Nigerian Employers Consultative Association. Thank you so much.
Thank you, Ladi, for having us.
All right, so we'll take a break now. When we come back, AFEX Commodities Market Update is next. Just stay with us. for the FX commodities market update. Now let's get a summary of the trading week on the commodities exchange. There was a mixed performance across key indicators. So turnover, that increased by 49.35% from 3.83 billion naira to 5.72 billion naira. There was also an increase of 54.40% in volume of contracts traded. Also observed is a decrease in the number of deals that traded. That was by 22.31%, closing at 94, while the FX commodity index fell by 0.16%, closing the week at 471.42 index points. The FX export index performed negatively, dropping from 221.03 points to 220.99 points. The volume of contracts traded, that's volume across maize, sorghum, and soybean, that increased. And now for across the commodities, we see ginger and sesame that maintained at 812 naira 23 kobo. And while the others declined, with sorghum falling by 2.58% and closing at 262 naira 63 kobo. We see soybean that fell by 1.07%, closing at 331 naira 44 kobo. Cashew nut, that's down by 0.49% and closing at 610 naira 69 kobo. Paddy rice fell by 0.21%. It closed at 318 naira 82 kobo per kilogram, and cocoa fell by 0.12% and closed at 1,884 naira 21 kobo. Across grain commodities, we see maize that lost by 0.19% and closed at 227 naira 39 kobo per kilogram. And taking the conversation forward now, we see the Senate of the Federal Republic of Nigeria recently passed into law the Investment and Securities Bill. Let's get a sense of how this bill impacts commodities, investments, and trading. Joining me now is Oladipupo Mutiu, legal analyst at AFEX, joining me from our Abuja studio. Great to have you on the show.
Good morning, Ladi. Thank you for having me here today.
So tell me now, what's the purpose of this Investments and Securities Bill amendment? You know, what's the amendment willing to achieve that was lost out in the previous one?
Essentially, the Investment and Securities Bill is a proposed amendment of the current legal framework that governs the investment ecosystem in Nigeria, which is the Investment and Securities Act 2007. This bill is a child of necessity, born out of the fundamental need to adequately protect investors in the ecosystem and, of course, efficiently regulate the Nigerian capital market in order to mitigate and manage systemic risk. And there's also the crucial importance to provide stringent punishment for operators of Ponzi schemes in Nigeria. As a matter of background story, according to a recent report of Norenberger in 2022, which postulated that in just the last 6 years only, investors in Nigeria have lost a whopping sum of 300 billion naira to investment scam. And the most notable and notorious among them all is the AMM Ponzi scheme, which occurred in 2015, in which over 3 million investors lost a whopping sum of 80 billion naira to this investment scam. And I believe you would agree with me that these occurrences and figures are quite worrisome and at the same time indigestible. And it is upon these premises that SEC, as the apex regulator of the Nigerian capital market, has come up with this bill in order to ferociously combat and prevent the recurrence of these abominable investment activities.
And definitely, the ISB is a response to gaps that existed within the global and Nigerian economic landscape. Could you describe some of these gaps?
So, talking about identified gaps and lacunas, the first point that belabors in mind is the fact that the current legal framework, which is the Investment and Securities Act 2007, is quite incredibly scanty and silent to the needed legal framework to govern the affairs of participants in commodities trading or commodities exchange. And on the flip side, this proposed law, the ISB 2023, provides an entirely distinct and elaborate legal framework to govern the activities and the affairs of commodities exchanges. And it does that with an abundance of crystal clarity and precision. And to create some examples, this bill provides provisions that relate to the registration of a commodities exchange, the responsibilities of a commodity exchange, the mode of appointment and dismissal of a CEO and other principal officers of a commodity exchange, even up to the particular commodities that are prohibited from being listed on a commodity exchange, amongst a host of other issues. Now, for the second point, which is of equivalent importance to the first point, is the due recognition that has been accorded to warehouse receipts as a tradable financial instrument. A warehouse receipt essentially is a document that shows and guarantees the quality and quantity of commodities deposited in a particular warehouse. So apart from these documents being a mere evidence of proprietary rights, it has now been recognized as a document that can be traded on an exchange as a financial instrument. So it can move from one trader, it can move from one hand to another without even the buyer having to see the physical commodities. So it constitutes some sort of derivative. And another functionality or purported advantage of this warehouse receipt is the fact that it can be exploited to access credit facility from either a financial institution or cooperative society. And how do I mean? Now, owing to the fact that every warehouse receipt is backed up by an actual underlying assets, underlying commodities existing in a warehouse, that commodity will serve as collateral to the financial institution that wants to extend credit facility to the farmer or trader. And that will give the financial institution the confidence to extend the loan to the trader, knowing fully well that if you default in the payment of your loan, the financial institution will have the liberty and legitimacy to take over your commodities and convert it to whatever use he so desires. And on the flip side, if you're able to repay your loan as at when due, you regain the custody of your commodities and warehouse receipt. And for the last point on the functionality of the warehouse receipt, you can exploit, a trader can hold on to his commodities for a longer period of time to when the market price is in his favor, unlike when you have to sell immediately after harvest due to lack of storage facilities. So these matters have been enumerated. They're actually in practice, but the only gap is that they weren't identified in the current legal framework. But this proposed law identifies them with crystal clarity.
Yeah, quite a lot to unpack there. But we see the Nigerian commodities market has been perceived as high risk. How will the ISB help de-risk commodities trading in Nigeria?
Okay. So we have mentioned the fact that gaps have been identified and their laws have been made to fill these lacunas. The ISB, in its bid to de-risk the ecosystem, now goes further to provide extreme penal measures to punish violations and infringement of these stated laws. So these penal measures are meant to serve as deterrents against the violation of these standards and framework. And to mention a few instances that are even related to the issues I've earlier discussed. If you are caught operating a Ponzi scheme in Nigeria, you'll be liable on conviction to a term of imprisonment not less than 10 years. If you are caught altering the content of a receipt, of a warehouse receipt, in such a way that it conveys false statement or misrepresentation, you'll be liable, the company will be liable on conviction to a fine of not less than 20 million naira. And every director and principal officer in that company will also be liable to a fine of not less than 10 million naira each, or a term of imprisonment of not less than 7 years. If you are caught issuing a warehouse receipt for goods that you have not received with intention to commit fraud, you will also be liable on conviction to the same severity of penalty. So in its bid to de-risk the investment ecosystem, it's instituted and provided for extreme penal measures to dissuade people from violating these laid down standards.
I guess the only risk is you buying, at the wrong time and losing your money, I guess. But, this bill is set to, confer new investigative and enforcement powers to regulatory bodies. How can these bodies ensure stakeholder compliance?
That's an intricate question. So one thing is very critical and central to stakeholder compliance, and that is stakeholder engagement. That is interaction between a regulator and the key stakeholders in that ecosystem. Now, when any law is passed, it is incumbent and imperative of the principal regulator to enlighten, educate, and intimate the key stakeholders in that ecosystem of the new development in law. And this can be done through, by organizing fora like seminars, conferences, symposia, and even through the media outlet of the principal regulator. Because laws are not made for regulators. They are not just made for regulators. They are made for individuals, businesses, key stakeholders, and they must be made aware of the new development. And at the same time, they must be preached to on the importance of compliance and the attendant consequences of non-compliance. That is on one hand. Now, for the second point, which is also important as the first point, is the fact that, from what your question even insinuated, SEC has been given or arrogated more power, more enforcement power. The fines SEC can now issue now, they are exponentially higher than before. So, by the virtue of the severity of those fines, you are ordinarily spellbound to abide by the regulations, because when you consider the extremity of those fines, using an example, if you alter the content of a warehouse receipt, knowing fully well that every principal officer in your company may undergo 7 years imprisonment, apart from the 10 million naira fine each person would pay. That is a sufficient dissuading factor for a company that believes in working within the confines of ethics and global business, global best practices. And for the last point, SEC has been also empowered to be able to conduct surveillance. They have the power to inspect a company, whether it's on-site or off-site. They have the power to summon any principal officer or worker in a company. If they believe that person has a reliable information on whatever may be the subject of inquiry or investigation of SEC. So when you consider the total interpretation of all these factors, they are sufficient to ensure the compliance of key stakeholders. And concluding with the ultimate aim of this bill, which is to restore investor confidence, reclaim the integrity of the Nigerian capital market, so much so that every potential investor, be it local or foreign, can confidently, without undue hesitation, decide to pool his fund in the Nigerian capital markets.
Right, I guess all parties have a role to play with the ISB. Thank you so much. That was Oladipupo Eluyera, the legal analyst at Apex. Thank you so much for giving us your perspective today.
All right. Thank you very much, Oladi, for having me.
All right, now, so still with the markets, we have some green close finally on the NGX, and Ini has details for us this morning. Congratulations, finally. Even though it's marginal, but
it's small. Congratulations.
But it's green.
Yes, but it's great. That's the bottom line. You know, interesting conversation you were having there with the AFEX about the bill. And you remember SEC, they just had their first committee meeting.
Yeah,
the
first quarter.
Yeah, and one of the things that they're focusing on is how to develop that commodity exchange. Because how can we say Nigeria has a huge potential in the agricultural sector and you don't have a solid exchange?
To exchange some of those commodities.
To boost trade,
yeah,
and also encourage, especially the farmers, or more people to go into farming of this agriculture. So that's an interesting bill that I think will follow.
Very interesting. So I can finally buy my paddy rice and hold and make some profit.
You know what I'm saying. All right, Ladi. So let's go to the market now. We're happy that at least we have a little bit of green, marginal as it may be, 0.02%. and we're still at 51,138.92. Equities cap actually is 27 instead of that 28 that we've had, but at least we do have a little bit of positive there, and this is because of Transcorp is still making the news, we can say that. But let's see the activity chart, and that's it. This was up about 700%. This was up about 200%. So the market was really, really active yesterday. Investors were very busy. Busy on Transcorp, busy on Zenith Bank and some others. And then the deals looks much better. This is a bit normal compared to what we've been having in the last 4 or 5 trading sessions. 4,668 and a whole lot of green there. Looking at the sectors helps us to understand there. You have that Zenith Bank, you know, one of the fugas. Whatever happens to them will certainly affect the counter. So Zenith Bank was down yesterday, lost 0.9% at the close of trade. Consumer goods marginally up. Industrial goods, however, well, almost positive, if there's anything like that. 0.17. Insurance is down. Oil and gas at least has made a move. Oil and gas has been, you know, unchanged, I think about 3 trading sessions. So this is like the first move that we'll have in 3 trading sessions. We see it in the positive 0.1312%. Now let's look at the top trades. There you have it. Transcorp led the market yesterday, trailblazer, what you call it, because it was the most traded stock both by volume and value. It was by volume, it was 1.60 billion units was traded. I don't know who's buying all of these things. Maybe we check Laddie's name somewhere around there. And those 1.6 billion units were worth 3.09 billion naira. So yesterday, we had investors just going everywhere looking for Transcorp. Wonder what will happen today if we will not have a sell-off anytime soon. That's where, and then of course we had that sectorial thing. At the close of trade yesterday, the market breadth was kind of undecided. We had 21 gainers and 21 losers. So hopefully today we will tilt closer to the greener side and make the bull bolder than it was yesterday. Briscoe recorded the highest gains of the day, while Vitafoam recorded and Lincolnshire were the top losers of the day. Vitafoam lost 8.7%, while Lincolnshire, that's for insurance, lost 8.3%. Now, we moved over to the fixed income space there, seeing what happened there yesterday. We had 79 deals yesterday worth 60.96 billion naira, and I can tell you that that secondary market, it was a bearish sentiment yesterday. Average yield expanded by 14 basis points to close at 13.9. And we also know that the yields have stayed stable for some days now. Overnight lending rate was at 19%, and it's been there for a bit. And we see almost all the securities getting attention of investors for yesterday. Let's see the treasury bills. There you have the treasury bills for yesterday. 5 deals worth 4.41 billion, and treasury bills was really quiet yesterday. Only 5 there. 5 that brought in 4.41 billion. Let's see the central bank bills for yesterday. That was not so quiet. We can see 39 deals with the May 2023. This is going to mature really soon. That's like next month, and that had 30 deals on it for 54 billion naira. But at the close of trade yesterday, we had 39 deals in total with 70.76. Let's just see the unlisted. We haven't done that this week. That's not fair. Let's see the unlisted. Yeah. So it's a positive one for yesterday, 0.32% up at 741.96. The market cap retaining its 1 trillion naira. At least we've had that relief for a bit. Can we see the next there? Volume 6 deals. A volume at 48,396, valued at 1.75. Do we have the top trades for the unlisted market? That'll be nice to see. Doesn't look like we have it because Laddie has taken it away.
Have I, really? Well, bringing you back to the NGX now, seeing this incredible move by Transcorp, they're about 23% in 1 week. So I'm wondering, have the Geregu Bulls moved to Transcorp? Is that what's happening
Since
here
Mr.
right now?
Otedola has that magic touch,
Yeah,
yes?
he might be the Elon Musk of this market.
Because Geregu has been quiet. We know that Geregu got listed and then it was just doing what Transcorp is doing.
Yeah, about 300%.
Yeah, and then we don't hear people really selling. Okay, no, we did hear a sell-off at some point,
Yeah.
but it never really gets down to where it started
Exactly.
from. And now we're seeing the same thing with Transcorp. I hope we're not trying
Where is Transcorp going?
I mean, I think you have a point there. We should really watch Mr. Otedola because
Exactly.
if it's Elon Musk, remember when Elon Musk changed the logo of Twitter
To Doge.
to Doge, and what happened to it?
Doge just went up about 20% immediately. Incredible.
We're going to have to investigate Mr. Otedola and see the magic touch that is
In these
using.
markets.
Perhaps we'll move it to the broadcasting and see what will happen there.
I'm sure. Thank you so much.
Thank you.
We need the details on the NGX and the fixed income market. Now let's head on to London now. We have our very own Teniola right there. Great to have you, Tenny. So finally, we have that inflation figure for March, and we're all expecting single digit for March inflation, but no, it's 10%. How's it looking?
Iladi, no single-digit inflation just yet. Like we spoke about yesterday, economists had predicted a drop to 9.8%, but unfortunately that hasn't happened. We're at 10.1% from 10.4%, according to the data released today. It gives some positive indications that inflation is dropping, but what is worrying is food inflation rising to 19.1%, and that's a 45-year high. So while the data released today does represent a slight improvement in the cost of living crisis, and that's because of fuel prices falling compared to last year, there's still huge pressure on households due to food prices being so high, with the ONS saying the likes of bread and cereals are at figures not seen in years. Despite falling last month and this month, though, we have to note that Britain's inflation rate is still the highest in Western Europe. But reacting to the news today, the UK Chancellor, Jeremy Hunt, has tried to cool alarm this morning, insisting that the government is still on track to reduce inflation by half this year.
All eyes on the Bank of England. Any chatter about what they're going to do next?
Well, Adi, as expected, this ups the pressure significantly on the Bank of England. There had been hopes that a deceleration in inflation would allow the Bank of England to pause its action to battle inflation through interest rate rises. But economists are now saying another 25 basis point rate hike appears likely when the Bank of England meets on May the 11th. Well, the BOE has already raised interest rates at 11 consecutive meetings since December 2021. So there's a high chance it will happen for a 12th time, taking interest rates to 4.5%. Analysts are also saying that the fact that this follows the latest labour market data we spoke about yesterday, which showed healthy jobs growth and a surprise pickup in private sector wage rises, will probably tip the balance towards another rate rise next month. But Ladi, I guess, we'll just have to wait and see.
Yeah, wait and see. I guess maybe April might give us that single-digit inflation in the UK. Thank you so much, Tenny. All right, let's take a look at what's happening in other markets now. We see Bitcoin. There's some correction, happening right there at this hour. It's that 30K level, significant level there. And we see the fear greed index still in greed at this point. Market is still quite bullish. Right now, I've seen the price of Bitcoin 1.38% up at 8 a.m. this morning. But at this hour, it's trading still a lot of volatility around that 30K level. Ethereum there, $2,075. Then we see BNB, Binance token there, 339. It's down 1.82%, haven't pulled back with that one. Cardano did start an upward movement yesterday, but it's down 1.67%. We see profit taking happening there. And XRP getting a big move up, 2.14%. Looks like XRP is quite bullish at this time with the SEC Ripple case. Might get some kind of finality this month for that case. So we're seeing the bulls already stocking up on XRP right now. Let's bring in Michael Enaji now, financial market analyst. Hello, Michael. Great to have you.
Good morning, Letty. How are you?
Morning. I'm good. But it looks like Gary Gensler's not so good from yesterday. We saw the chairman of the SEC in the U.S. there did have a big grilling yesterday at the House, and it's about crypto, Ethereum, Bitcoin. Is it a security or a commodity? But it looks like he couldn't answer that question.
Yes. So Chairman Gensler yesterday at the Financial House Committee meeting was basically put on the hot seat. He was put on the hot seat by the a team of Republicans. Basically, what happened was they asked him just point blank. The number one thing he was grilled on was, is Ethereum a security? And we are not sure if he wasn't saying Ethereum is a security because there's a pending case on Ethereum, and they're usually not allowed to speak on pending matters. So that's something to look out for. But I really do believe that with the enforcement actions that have come from the SEC and how they've handled crypto, it's been a very negative. It's been a negative undertone towards innovation, and a lot of the risks that were discussed yesterday in Congress was basically that if Chairman Gensler keeps on going on with how he wants to keep treating crypto, he's just going to move this entire industry offshore. And really, with the Bittrex action that came in this week, with them saying that Bittrex is running an illegal national securities exchange and has 6 securities on there, I think that the regulation by enforcement is really proving to be draconian. And the members of the Financial House Committee basically said that, Chairman Gensler just can't just go around, making his own, being his own sheriff in town. He has to answer somebody, and he's an appointed politician. He is not elected by the people, and so there's a lot of there's a lot of kickback to how he's handled things because he hasn't really allowed us to come into compliance as he quote unquote says. So that's one thing that was the key takeaway from the meeting. So definitely the lawmakers are hearing from the constituents. And the constituents, are just unhappy that they're trading billions of dollars of these assets, yet the SEC has such a negative undertone, and and the clamor that they're all securities just isn't realistic. There has to be some new kind of legislation that's drafted to accommodate these and bring them into the law and make them products that retail can touch in a safe manner. I really don't believe securitizing all these assets is the right path because it's just not feasible, and it's just not practical in light of how crypto works. And so at the end of the day, I do really believe Chairman Gensler deserved everything that he got yesterday because his treatment of the industry has been totally unfair, and he's not one that promotes innovation. He's just looking out to how can he secure his power. How can he make everything a security and have the SEC regulate it?
And Michael, listening to the line of questioning yesterday, it did seem like the lawmakers are trying to protect the industry.
Yes, they are. It's a massive industry. And some of them do recognize the importance of Bitcoin. I think Bitcoin in the next 10 to 15 years will become a very significant geopolitical asset in terms of reserves. And by what Chairman Gensler is doing, he's probably putting the United States a couple years back in terms of the whole geopolitical play, and some people recognize that, and so that's why you're seeing this heavy pushback of you're just like, this is what he's doing is not okay. He needs to find a better way of bringing these products into compliance as he wants to do, quote unquote. And at the end of the day, this is a huge geopolitical bluff for the United States to have all its crypto companies move offshore to a place like China and Hong Kong or in the UAE. It's really a big loss that crypto would have flourished here just to leave. And the lawmakers really don't want to see that happen. And so that's why they're really fighting to see what they can do to ensure that crypto stays onshore. And not only does it stay onshore, that it thrives and grows into the industry that everyone knows that it can become. And so the first thing they said is they need stablecoin regulation. And so, it's the easiest thing to do is stablecoin regulation, because it's very obvious what you're doing. You're trying to create a tokenized cash product. And so there's no reason why that we can't have, solid rules around this offering. And so
Okay.
it's an indictment on the SEC of their failure to bring this entire industry into compliance.
All right, Michael, I guess that whole hearing was quite bullish for the industry and for Bitcoin, I guess. but what do you see? What are you seeing for Bitcoin price action going forward?
I think going forward, this rally still has legs. Right now, I would say we probably will cool off for a bit before continuing higher. But I think the final target of this rally is between $40,000 to $50,000 Bitcoin. I think we get there and then we reassess. But the target right now is 40 to 50,000. Obviously, it's not going to happen today or tomorrow, but that's the target I'm expecting in the next, I would say, 100 to 120 days.
Yeah,
so I think that's the more
how this price just creeps up when you're not. It looks like you're not even watching. Next thing you see, it's there already.
Yeah, yeah. With the bank failures, how could you not? The money has to leave the system somehow. And that's what you're.
All right. Thank you so much, Michael Naji, financial market analyst. Thank you.
Thank you, Larry. Bye-bye now.
All right, so that's how the market is looking. We see Zilliqa, the top in the day, again, is counter up 10.32%. Kasparov on that list. ICP is still staying on the top, getting us counted as internet computer. Well, that's how the market is looking today. Not so bad, still quite bullish right now. Don't forget to join us 1:30 for Business Incorporated for more updates and developments in the world of business. And you can watch this again on our YouTube channel. Just flip over to YouTube, search for Channels Television. You can watch all our productions. Thank you for watching. I'm Ladi Williams. Bye for now.